Good morning, traders. This is Barry Wilkie with StartupTrading.com. It is Tuesday, September 10th, uh, about 10 till 9. So looking back, before we go to yesterday's action, let's look at the news real quick. So for today, really nothing going on. We're going to have Vice Chair uh, Barr talking about Basel 3 Endgame, which I'm sure to some FOMC nerds out there somewhere, this really matters. But audience questions are expected. It says audience questions more than likely that would throw any monkey wrench in anything either direction. But for the most part, it won't be that. It'll be we have two inflation prints this week. We have CPI tomorrow and PPI on Thursday. Those are going to be your big reads because if you remember, next week, right, we have that's when our calendar changes. We have rollover on Monday. We have the VIX expiration on Wednesday. We have the FOMC announcement, the first rate cut on Wednesday, and then quad wedge on Friday. So, to be honest with you, uh, there could be a little bit of, you know, shenanigans around 10 o'clock, but when aren't there shenanigans around 10 o'clock, even without a newsprint? So uh, I wouldn't, be overly concerned with this print at 10. It'll be, all about tomorrow morning's read. So looking at positioning real quick before we get into anything else, uh, 460 is the major strike uh, for the Qs today. We're currently trading 456. So this would be, $4 above. So that would be about 160 points higher than the NQ is trading right now. So that would put us right around, 18,910 ish. Check the QQQs for exact prices as we get near there. Uh, as far as the SPY, anything between 540 and 553 is fair game today. We are currently trading uh, 548. So, we are right in the middle of the ball of wax. And if we look at the cash market for today, 54.30 and 54.25 are the strikes. We closed at 54.71 yesterday. Futures are up 16, so that would make it, right around 54.87 uh, is where we are right now. So uh, getting closer to 5500, and from 5500 to 5510 is, a little bit of gamma for today. I think we beat that up well enough for today. So looking back at yesterday's action, right, inside day basically for all of the indexes, the Dow, almost did something. All of the time and price was basically uh, inside the value area high zone from Friday, which you're really cutting the tea leaves to try to, parse that out for any significant information. If we look at what that did to structure, we had salmon run trades go off in the NASDAQ after the bell, right around these single prints that were left over from last week. And then we had excess and A lines on the Russell and on the Dow. Other than that, nothing really major going on. And we still had those prices that, it probably not a great idea to be short above those. It would probably be better to look for long pullbacks. You can look for short pullbacks if we, pop and flop back under it. There should be plenty of opportunities at that point in time. So we have, this candle that came down on Friday, right? We took, quite a bit of it back yesterday, but it was still an inside day. We are trying to open up under it. Keep in mind that this is overhead supply up here between 5509 and 5560. So we'll see, what this is, but we could easily turn into the middle of that range. Uh, Looking at one time framing, if we were to open up here, and no one says that we will, we still have 35 minutes till the bell open, but we would be opening up above yesterday's high of the day, meaning that one time framing down should be over, and you have to just if it's a pop and flop, obviously you could get an engulfing candle bearish on the way down, right? You could take back everything from yesterday. You have a little bit more. Think of it as a battering ram on the door. You've backed up far enough that if you do start coming back into yesterday's range with any thing, you're probably going right to the bottom of yesterday once again. Otherwise, you are, potentially looking at a squeeze up until probably, Friday's highs, basically. And if you look at where we could really end up if it's just, go nowhere, do nothing, which we would still be doing something today, look at the range from last Wednesday and last Thursday. We could easily get back into that 2-day balance right there and just trade that today. And then that would be significant for us day traders, but not really significant for any long-term investors. Looking at where we are with these single prints, overnight action 35 points right now exactly on the ES. We are right at the bears either need to come in or they're gonna get trampled on because we had basically just incremental lower highs on Wednesday, Thursday, and Friday of last week. Those should be easy to run over. Uh, Once you get up into the area of uh, 55.39, and maybe that is still another 50 points up higher than we are, 45, 50 points. It's going to take some work, but what I'll be watching is, if we do cross over this do not short or be cautious with shorts above this line, uh, we should get some consolidation within here. And again, like I said, you're going back to that Wednesday, Thursday balance, and that's going to be a little bit of a churn zone. So I wouldn't get too greedy with it, taking it out, but any on any real significant strength, and I'm talking about more than double what we've already had in the overnight session as far as range. This single print up here at 55.65 basically is going to be where the market wants to go. Looking at the other indexes, the Russell is in value, the Dow is in value. Uh, Both the NASDAQ and the ES are right above those single prints. Potentially, that could end up being support for the day on a very aggressive tape, especially if we start printing numbers above these XS and A lines. From Friday. So that it's a simple game plan. There's no sense in making it complicated. Keep in mind, no matter what happens in the morning, that you could be getting hedging coming in for tomorrow's read. Also, keep in mind that all of the inflation reads for the last 14 months have all come in within the margin of error. There have been no surprises. The market seems to have a handle on it better than the FOMC does of what's going on with inflation. I don't expect any surprises this week that are outside the margin of error. People don't really talk about that too much, but it's something you should be aware of. Uh, and then so hedging could be, we've been down quite a bit lately. The fear could be that the market goes higher, right? Normally when we start hedging, we're up and around near highs. Hedging comes in, it puts a little bit of downward pressure on the market. Hedging can do the opposite as well. It can put upside pressure on the market. So watch the VIX. That's going to be your key if it starts one time framing, especially if we start putting in poor structure today. So look for one of two scenarios, right? We either get poor structure and some streakiness heading for some imbalance that we'll have to correct later on in this week, or we're just going to get, balance probably uh, more than likely marginally higher than we were yesterday. And look at that Wednesday, Thursday zone from last week to balance inside of. Uh, and then for the bears, if we start collapsing, you get that that's their wet dream that we have an engulfing candle to the downside. I think that is probably the least likely scenario, but it is a scenario that is on the table. So I'd say I would put most of my weight on that we start holding around the yesterday's high and we start pushing upwards and find a new balance zone. It's probably going to be that Wednesday, Thursday balance zone for the ES and the NASDAQ. I hope this helps you guys have a great day, and we'll talk to you tomorrow.